Ed Ponsi here, your FX educator, here on behalf of FX Street once again. Fantastic to be here. Thank you very much. And it's Tuesday, February 21st. It's springtime officially. And the snow is melting here on the East Coast, finally. And it's great to be back. My name is Ed Ponsi. Thank you, FX Street, for having me here today. It's great to be here. We'll be doing 2 sessions today, and we'll be reviewing our trade from yesterday in particular during this session. Really important news this morning out of the UK, and I'm going to back it up a little bit on here so that we can see everything that happened from this morning. First of all, if you look at the UK, you're seeing little signs of inflation everywhere, all around the world. Housing price index in Australia up 4.1%. We know the US is raising interest rates because the US, the Fed sees signs of inflation, particularly in wages. We know that in Europe, we finally saw 2% inflation. And retail prices in Great Britain up 3.2% year over year. That's higher than the expectation of 2.9%, but 3% retail price index. That's higher than expected. Month over month, 1.1% prices are rising. That's higher than expected. So prices are moving in the UK as well. Not all prices. We see producer prices a little bit lower than expected. We see house prices. Look at the housing prices are up 6.2%. Now that's lower than expected, but that's still high. Okay, so let's not lose sight of that. That's still on the high side. And some of these numbers, the PPI core was flat. That's lower than expected. PPI output lower than expected. And some of these numbers were lower than expected, but still on the high side. Like especially producer price index input up 19.1% year over year. That's lower than expected, but it's still on the high side. Consumer price index up. This is the big one. Look at the big red bar there. That's your telling takeaway. The goal has always been to get this number above 2%. It's at 2.3%. That's big. That's big. And the British pound moved on that. Now we'll take a look at that. That's the big inflation number, 2.3%. We're going to take a look at the British pound here. And you're going to see a big green candle. And the pound is at its highest point, right, in weeks. Right, it hasn't been this high since, it looks like late February. And if you look at this, it looks like it smashed right through our stop from yesterday. But I'm going to take you to the 15-minute chart. Right, and this is why we use multiple targets. This is why multiple targets is so important to me. Take all the indicators off of here. I was using a variety of indicators yesterday afternoon. Now, yesterday morning, we were talking right around the same time as today. So it's 8 o'clock right now in New York. So we were talking at 8 o'clock yesterday. Right here. All right, the price was right around 1280. I think we entered at 1275. $123.75, I should say. And the price starts moving our way a few hours later. And take a look at this. our first target is 123.35. Look what happens. It just comes to our first target. Look at that. I'm showing the low is 123.34. Our target is 35. So it just barely makes it to the first target. Now, whether or not that's going to hit your first target has a lot to do with where you're trading because of the spread. And I'd really encourage you to look into raw spreads or core spreads. Different brokers use a different name for it, but FXCM, dearly departed from the US, FXCM, used a term called raw spreads. And what that meant was that when you traded with FXCM, you paid a commission and the spread would be very, very small. Like something like pound US dollar at a liquid time of day might be 0.2 of a pip. Right? And so they were not widening the spread. You see, I'd rather pay the commission and have the narrow spread, because if you pay the wider spread, that could make all the difference on whether or not you're going to get filled on something like this. I'd rather just pay the little spread, pay the commission and get the tiny spread. And therefore, I don't have to worry about whether or not the wider spread meant that I did not get filled on this order. It turns out that it actually does. It is a meaningful. It can be very meaningful. Anyway, right? It barely makes it to the first target. And can you tell where the inflation data starts to come out? I think you can. Because the inflation data comes out. Now, once you hit the first target, the stop comes to break even. So you hit the first target, you close 1/3 of the trade, and 2/3 is stopped out at break even. So using multiple targets in this case is the difference between a small win and a loss. And that's why I use multiple targets. All right, and so if you're ever wondering why multiple targets, that's why, right there. Nobody could have predicted, what would have happened in advance. We don't know what that inflation number is going to be. And even if you do know what the inflation number is going to be, you don't always know how the market is going to react. But you can see here that there's a tremendously strong reaction for the pound. Perhaps more short covering. We talked yesterday about how the British pound traders were massively short the British pound recently. And so you could still be seeing the effects of that. So this is something that is now going to be a theme. Why is the dollar not strong? Because the dollar has been strong for a long time, but now inflation is showing up everywhere. So all these countries are going to start raising rates. Not right away, but it's going to happen. Okay? So the UK will raise rates eventually. We've already seen one dove on the Monetary Policy Committee. Look at that big, ugly red candle today on the dollar index. This ugly chart, it looks to me like we're getting there, folks. It's under 100. This dotted line is 99.5. It's going to happen, folks. The dollar's done. Dollar's toast, man. So CPI, Consumer Price Index, is the thing that is making the British pound strong today. Okay? It's that inflation. And you've got 6.2% housing price increase in the UK. I don't know if you folks remember it, but before the Brexit vote, people like George Osborne, who was the Chancellor of the Exchequer, before before Theresa May became prime minister, and you know, before Brexit, before the Brexit vote. People like George Osborne was saying that housing prices in the UK were supposed to fall. If the UK votes for Brexit, housing prices in the UK are going to fall 20%. Well, guess what? Housing prices are up 6%. More nonsense from all these people who lied and lied and lied, right? And this is why I would tell you, just don't believe anything you see on the news. I wouldn't believe any of it at this point. So the Bank of England's target rate for inflation is 2%. It has shot past it. We are at 2.3%. So we already saw one hawk on the Monetary Policy Committee. One person voted for a rate increase. Next time, are we going to see 2 or 3? Could be. We'll keep an eye out for that next month. Okay, all right, let's move on. Okay, so anyway, this chart, as I mentioned yesterday, if this chart gets under 99.5, look out below. So where's the pound heading to? Back to pound dollar. So anyway, that yesterday's trade turns into a small winner instead of a loser. Why? Because of multiple targets. But look at this. I mean, 4 out of the last 5 candles are green. Some of them are big green candles. Lots of shorts are covering. Shorts are getting clobbered on the pound. Where's this thing heading to next? There's some resistance in this current area. I think it's kind of tough to say. You don't have all the resistance jumbled together in one spot like you do on the euro, which is right into that current area right now. We'll look at the euro next. But I'd say if I had to pick one area out, I'd be looking in this area right here. Because you've got this, and you've got this area right here, and this area right here. So it looks like I'm looking at about 127.25. That's a long way off. There's other areas of resistance here. There's 125.50, there's 126.50, and there's 127.25 on pound. But it looks like a jailbreak to me. A lot of shorts are covering. And, you know, if you listen to the news, they were all telling you that the pound was going to go to parity against the dollar and that it was doomed. And, you know, all these people were wrong. They're all wrong. They're all wrong. All right, I see a lot of comments coming in, so let me jump in here with you. Carlos says, Dr. Copper short is working, Ed. What's your opinion? On 255 is target 1, 249 is target 2. Let's take a look at Dr. Copper. Hold on a second. I have a special guest here. Hey, sweetie. Hey, Daddy. Have a wonderful day at school. I love you. Okay, Daddy. Bye-bye. Okay. All right. Take a look at the copper chart here. Yeah, this thing looks like, oh, this thing looks horrible now. The funny thing is, right, the dollar is getting crushed, but it can't save this thing. You would think that with the dollar getting hammered the way it is, you would think that copper, that would be a positive, right, for all metals, all commodities, right? Dollar goes up, puts pressure on all commodities. Dollar goes down, it helps all commodities to go up. It's not helping here. Not helping at all. Not helping a bit. Makes me wonder, was there bad news out of China that I might have missed? I'm not seeing it. Let me check here really quick. Did I miss something overnight? I did not, apparently. Okay. Let me check your targets here. 255 is right there. That's spot on. I picked that out right away. I'm thinking 250. Yeah. Let me put it right on 255 with you. Yeah, this area right here. As far as support, I see that, although my eyes are drawn to this because it's more recent. But yeah, I think you're right. This is more significant here. And 249 would be right about here. Yeah, I think these are good targets. Yeah, I see nothing wrong with these. Copper's a mess. You know, copper's a mess. Look at this. High, lower high, lower high, lower high. Low, lower low, lower low. Why not? I see no reason why not. I think you're onto something. USD might be heading to 98.26. Let's pull up the DXY. I mean, if you wanted to use measuring, you could probably project a lot lower than that. But I mean, measuring is a very basic tool that really precedes charting. Or I wouldn't say precedes charting, but I think let's just say it goes back to the days when people drew charts by hand. It's a very basic, approximate tool. But if you wanted to measure, we could talk about 103 to 103.5 to 99.5. I think you could say that leads you probably down to 95.5. That's absurd, though. But 98.5, I think that's. I think you might be being conservative. You know, I mean, this is a cliff face here. There's no real support in here. It's just a straight up move. Dollar is toast. Yeah, right. I mean, it really seems like it. And I think a lot of it is like people got so enthusiastic and so excited, and now, you know, like people are going, well, why were we so excited? Well, why were we so enthusiastic? You know? Don't know. But yeah, I think 98.26, let's just drop a line right there. You make it a weekly. I know Carlos looks at the longer term, bigger picture sometimes. I'll tell you what, I mean, it's a worthy target for sure. All I know is this: if you get under that dotted line, there's going to be an awful lot of unhappy people who are long up here. I wouldn't be surprised if we bounced off of that line first before it broke. Just because we bounced off of here several times in the past, if on that alone. But I mean, I don't know if the dollar is done or not, but it seems like you're getting some momentum here. First of all, people are realizing that the world is not going to end with Brexit. There was a comment from, was it Juncker yesterday? Let me see if I can find it. Yeah, here it is. And this was on FX Street, published this. European Union's Juncker, Brexit example will make everyone realize that it's not worth leaving. Reuters reported comments from European Commission President Jean-Claude Juncker during his interview with a German newspaper earlier in the day. He's not worried about other European Union countries leaving the bloc after Britain, because Brexit will make them see that it's not a good option. He said, no, Britain's example will make everyone else realize that it's not worth leaving. On the contrary, the remaining member states will fall in love with each other again and renew their vows with the European Union. Okay, I call BS on this. This is the attitude. They're going to make it. They're going to do everything they can. The European Union is going to do everything they can to make life difficult for Great Britain, for the UK. They're going to do everything they can to make it as hard as they can on Great Britain. And they're going to fail miserably. Great Britain's going to be just fine. Look at this chart. This chart's telling you they're going to be fine. Just as when the dollar gets under 9.5, it's going to be a jailbreak. If the pound ever gets above 127.25, I'm going to make this a weekly. This is also going to be a jailbreak. If it ever gets above this line, people are going to say, oh my God, it's a buy. And anybody who's short under here will automatically have to cover. I think people are going to be in for a realization, an epiphany at that point, that they are way overestimating. And this guy Juncker, he's dreaming. He's dreaming because Great Britain is, the EU is like an oil tanker. You can't maneuver this thing. You can't steer it. It's not very nimble, right? You can't change the direction. It's stuck in its policies. Britain, freed from the European Union, is going to be like a speedboat. The European Union is going to try really hard to make life difficult for them. And they are going to change their laws, change their rules very quickly. And they are going to make Britain very business friendly, and they're going to lure businesses from the European Union, and they're going to become extraordinarily successful. Read about Singapore. Did you know that just over 50 years ago, Singapore was not an independent country? Okay? Singapore was kicked out of, was either Indonesia or Malaysia, I forget. Was kicked out of Malaysia just over 50 years ago, like 52 years ago. Singapore was kicked out of Malaysia. And now Singapore's economy is bigger than Malaysia. There's a lesson in there, folks. So what did Singapore do after getting kicked out of Malaysia? It was this tiny little country. And it was able to, it changed all its laws. It changed all the rules. You go there now, it looks like New York City. It's all skyscrapers. It became very business friendly. It had very low taxes. Lured all the businesses in. It became very business friendly. And now its economy is bigger than the country that kicked it out. Hello? Right? So this is what Britain's going to do. Britain is going to lure the European headquarters for Apple is now in Ireland. Guess what? 5 years from now, it's going to be in London. Just call it a feeling. Google, same thing. Just call it a feeling, okay? All these companies that the European Union is going after and try to extort them for billions of dollars, guess what? These countries are all going to relocate to the UK, their European headquarters. They're all going to relocate their European headquarters to the UK. You'll see. It's just my opinion. I could be wrong. Let's take a look at the euro. The euro looks like a huge double bottom. And it's in that danger zone we talked about. We talked about, that it failed in this 108 area before. It failed here a year ago. And I'm sorry, not a year ago. It failed here about 3 months ago, and it failed here about a month ago. And now it's in this area again. But if it breaks through here, it's probably going to 111. It's probably going to run. Carlos says euro pound. We haven't looked at euro pound lately. Euro pound appear to be forming a large top. I'm going to make a weekly chart out of this, because this appears to be forming a large, possibly a big head and shoulders, right? Went to 87.20. I dropped. I was shorting it, set my stop loss right above 87.36. Decided not to take the trade. I believe 85.82 could be a target. Yeah, I've got a whole series of stuff already set up in here. That never triggered for some reason. I'm not sure why this never triggered. I had a whole setup in here. Oh! I had a catch on the way down, is why. So maybe this is triggering now, or it should be. I'll have to take a closer look at this. Let me zoom in here. Come on, TradeStation. There we go. I don't know. It still looks like it could be a good potential short here. It did go above, and now it's come down. So it's now meeting the criteria that I laid out earlier. Yeah, we looked at the 1 hour last week. This is the 1 hour now. It did go above and come down, so now it's met the criteria. Yeah, this still looks potentially promising to me. Although they're both strong right now. It's like strong against strong right now. You can see they're both getting pushed up and down. I'll have to take another look at this one during the break because this session's wrapping up. But we'll be back in 30 minutes. But I'll look at this one during the break, and we'll come back with this in 30. So why don't we do that? We'll stop here, and we'll come back in 30 minutes. So until then, this is Ed Ponsi, your FX educator for FX Street. Thanks, everybody, for listening. I'll be back in 30 minutes with another session. Thanks for all your participation, everyone. I really appreciate it. And I'll see you back here really, really soon.